Thanks so much for joining us both. Scott, for those who might not be familiar, could you give us a breakdown of what CORSIA is and who it impacts?
Sure. So CORSIA stands for Carbon Offsetting and Reduction Scheme for International Aviation. It's a bit of a mouthful, but ultimately it's a mandatory scheme for the aviation industry to offset a portion of their emissions. We're now in the third year of a 3-year scheme, which runs from 2024 to 2026. And we're really getting to the crunch time with obligated airlines needing to get out there and start to purchase carbon offsets to meet their obligations. And we're already seeing a lot more activity in Q1 of 2026.
Thanks, Scott. That's super interesting. Rosie, could you give us some insight into the market and how it's responding to this?
Yeah, of course. So airlines up until now have been mainly focused on sort of understanding the underlying policy, monitoring their own emissions, and just getting a real feel for what CORSIA-eligible emissions units are, or CEUs. Whereas now that we're moving forward, there's a real move towards active procurement.
That's right. So if we look at the end of last year, it would be fair to say that most airlines still hadn't procured or done anything to meet their obligations. We're already starting to see a lot more activity in Q1 of this year, and it's our prediction that by the time we get to the second half of this year, most or the majority of airlines would have done some procurement in some way, shape, or form.
You mentioned that there's been more procurement activity in 2026. What does that look like in practice?
Yeah, that's a good question. So, procurement activity takes many forms, and the sort of uptick that we've seen so far this year mainly stems from the catalyst, which was the release of the 2024 sectoral growth factor. So, airlines have taken this, and the structures that they're choosing to procure CORSIA with are mainly spot, delivery, forward conditional deals, and then the more complex one of forward delivery guarantees.
And this is quite an interesting one and practical
Mm.
for a lot of airlines because it's a great way to manage cash flows by agreeing to take delivery of something you don't need until January 2028, sometime at the back end of 2027, fix the price, get the security, and know that you're going to meet compliance. But it does also come with confusion when it comes to things like legal contracts. We're not dealing with a typical futures exchange. So we're having to troubleshoot for things like walkaway clauses, EU regulations, and anything else that might crop up. These are things that we've been working through and already have solutions.
When we were speaking earlier, just before this started, you mentioned that some airlines were questioning if CORSIA was actually real, which it very much is. That leads me nicely into my next question. What are you seeing airlines do now in response?
Yeah, so it is a question we hear, and a fair question when you look at the political landscape so far. But saying that, sitting around and kind of waiting and seeing what may or may not happen with CORSIA just isn't a strategy that we'd recommend any airline adopting. I think the way we see things moving forward and the way that airlines are now acting, they're kind of beginning to come to terms with the reality of CORSIA and really are acting accordingly now and making those structures and plans.
And on top of that, we think that there's definitely going to be an early mover advantage. Would anticipate some supply bottlenecks as we reach the end of the compliance phase, back end of 2027 and January 2028, when they ultimately have to retire these units. So those that get out there early are going to take advantage of better pricing in the short term. And some of these uncertainties around things like EU regulation on top and US involvement in the scheme, we can troubleshoot for some of those problems in the contracting phase.
If we're to stay on the subject of supply, how do airlines actually know that they're receiving CORSIA eligible units?
It can be confusing. Within the spot market, it's a lot more clear because when a project becomes eligible, it receives that CORSIA tag, the stamp of approval, which airlines can clearly see on these public registries. It gets to that confusing stage when airlines are contracting on forward delivery guarantees. These can be project agnostic, and when the supply doesn't already exist in the market, they're not fully aware of what they're receiving. So that's where we step in.
And this is part of the value that we're ultimately looking to bring within the market. We've spent the last 3 to 5 years building up a portfolio across different geographies, different asset classes within the carbon market to make sure that we've got diverse coverage and manage that risk in-house, so that when we're offering things like forward delivery guarantees to an airline, we take that problem away from them and offer it as part of our solution.
And for airlines that might not yet be thinking seriously about CORSIA, what are some of the risks? I know Scott's just kind of briefly mentioned this. If they don't start moving quickly, supply options are limited. Is that correct?
Yeah, so supply constraints are one of the main concerns that we hear, and it is a little unclear what would happen if that ends up being the case. I guess the thing that we can say now is that there is this window of opportunity to sort of take advantage of other airlines' uncertainty with the market. Supply was definitely one of the main issues originally, but we're seeing a lot of new projects come on board, so things are beginning to change.
That's right. So up until for the first 18 months of the scheme, there was only one project that was eligible. And in the first part of this year, we've seen another close to 10 projects coming through. Probably by the time we get to the end of Q1, there could be as many again. And it sounds like a lot of supply, but the reality is that if one or two large airlines come in and decide to procure for their entire obligation, they will completely absorb the majority of that volume and we get to a tight market again. So we'd encourage people to take advantage of this temporary supply glut and get out there and do something now.
And it's interesting to see how CSC is navigating this space, providing the supply solutions for CORSIA compliance while also offering hedging across oil and other energy exposures. As a final thought, what would you say to airlines looking to get ahead in this evolving market, and how can they utilize CSC as a one-stop shop?
Yeah, as you know, commodity hedging is our bread and butter. So we've been helping airlines manage their risk in things like jet fuel hedging and EUAs for a very long time. CORSIA, we're not looking to reinvent the wheel. We're looking to simplify what so far has been a very confusing scheme for aviation. And we're doing that by using our own portfolio of carbon projects to absorb some of these risks that they're facing within the market.
Yeah, exactly that. For airlines, CORSIA seems like a new and daunting exposure. But for us here at CSC, this has been one of our main focuses for 3 years, building this portfolio of CORSIA Phase 1 credits and also being prepared for future phases as well. So we encourage any airline, irregardless of how prepared they are, to reach out. We feel that we're really confidently prepared to help airlines of any size achieve compliance.
Thank you both for sharing your insights with me today. This concludes our second Market Pulse episode, Marex's podcast on the markets, asset classes, and regulatory developments that shape the global economy. For those interested, we've published a couple of articles and tips around CORSIA, and you can find the link in the caption above. In our next episode, we'll be joined by co-head of metals market making, Patrick Seymour, and senior metals analyst, Alistair Monroe, discussing the latest dynamics in the metals markets. See you then.